Although it's been a rough couple days, the stock market has been so resilient, bouncing back and now up 1.13%. Here is the Nasdaq, the S&P 500 up 1%, Dow Jones up 0.8, and the Russell actually hitting fresh all-time highs, and that looks like very constructive bullish price action. Take a look at the daily chart on the Russell. This is, of course, small cap companies in the United States, which are reigning supreme here and actually outperforming, which is really refreshing considering small caps have been getting beaten down by large caps over the last few years pretty handily. We also see volatility falling flat on its face here. We had a huge spike following everything that went on Friday with the Trump tweets and posts everywhere about how, him and China were at it again. But we've seen both sides actually kind of squash the beef pretty quick. The Chinese and the US both kind of taking a step back and acknowledging that they need each other in the bigger picture of things. And so while fear headlines are all over the place, let's take a look at the fundamental analysis, technical analysis, and sentiment analysis to find some high probability trade setups for the rest of this week. If you enjoy my videos, make sure to hit the thumbs up button, subscribe if you're new, and let's get into it. So first and foremost, I wanted to start by taking a look at the Nasdaq on a daily chart. We drew our Fibonacci retracement here from this low that we put in September to the previous all-time high just here a few days ago. And that gave us an interesting sort of map out of the situation when we had the ginormous sell-off that we saw last Friday. We came down and tested a key area of support and actually initially punched through it, but found support actually at the 50% level. Now, I personally went long the Nasdaq at this level here around the 38.2% retracement with a stop loss just below where we closed on Friday. Did I get lucky on not getting stopped out? I don't know. You let me know in the comments. I think I kind of got a little bit lucky, but again, stop loss placement was deliberate in the sense that I put it below this intraday spike low as my last line of defense and fortunately was able to stay in the trade. So stop loss placement is really key here. And again, I'm not going to pretend that, I knew it was going to turn around right there, but I did put my stop just below this structure and it did hold very well, gapping open on Monday. And now, again, yesterday's candle was something that I think we should take a closer look at. You had an initial fear spike to the downside, but notice something about what price action did. We actually retested my entry point, bounced, and put in a technical on just a bar to bar move here, a higher low in the sense that, again, we had kind of the low, then we shot up, we came down, put in a higher low and took out the prior highs. This looks very constructive. Path of least resistance, as I've been saying in my videos, to me seems like a push back to the highs. As we still have many factors that favor the bulls, let's talk about the fundamentals. I'm looking at the Edgefinder's new AI scanner, which scans a collection of market data to generate a bullish or bearish bias on symbols that we like. I've selected the Nasdaq, and technicals are getting a bullish reading. As we just got done discussing, we are in a daily chart upward trend. Seasonality looks good. Trend is actually getting a bearish reading, but I think that after today, that is going to flip bullish, giving us even more of a bullish reading on the Nasdaq. Additionally, institutional positioning looks interesting as we are a little bit outdated on this. Due to the government shutdowns, the commitment of traders report has been delayed, but the latest change has been showing bullishness, so we'll still factor that into our analysis. I've had some questions on this as people have said, well, how good is outdated data? Well, remember, even though it is a bit outdated, it is still what we're all operating off of. No one is operating off of other data, right? Because again, this is the most, important stuff that's just been delayed. So people are still looking at that as kind of the line in the sand. Now you have had some non-government issued data that people have been focusing on, which, for example, we can look at the put to call ratio, which is where we get retail sentiment data for the Nasdaq, which is showing the crowd is scared and bearish. So we're getting a bullish rating here. The economic growth data that we're seeing is showing GDP, manufacturing PMIs, and retail sales still look promising for growth. The consumer seems to be holding in there, which bodes well for further upside in the Nasdaq. The jobs market is where you lose some score. While unemployment rate has been neutral, employment change, or the NFP report, has been pretty rough. I'm very curious to see when we next get our next NFP report what that tells us about the jobs market. Inflation data, however, is a beacon of hope, in the sense that, yes, you have a little bit of stickiness in inflation, but the overall trajectory of interest rates is still expected to go down, and the producer price index number, which is wholesale prices, have not seemingly been overwhelmingly passed to the consumer price index, and actually they came in lower than expected. Let me just show you that for reference. So what the Edge Finder is spotting here, if we zoom in on this, is you can see that although this is a little bit of old data here, still it tells us a story. This yellow dot is the expectation that we had for forecasted producer price index inflation data. It was expected to be 3.3% and we got 2.6%. So essentially we had some really good reads here in terms of inflation that help to support that the Fed can cut interest rates to help with the other side of their mandate, which is the slowing jobs data, which we discussed in yesterday's video, catching you guys up on unemployment stuff. Again, long story short, unemployment is on the rise, though it's not at any sort of critical level. If we increase our scanner look back period, you can see that inflation spiked dramatically during the COVID pandemic and has kind of traded moved lower here and gone sideways. And while it has kind of drifted just slightly up here, I think that has not too much to worry about if the Fed is able to continue to cut interest rates, which should help to spur job growth. Just take a look at the NASDAQ updated here as I'm filming, now up 1.43%. So I went long the QQQ, which is an ETF that tracks the NASDAQ, as there is very low trading costs or holding costs to holding QQQ. And so we're looking pretty good here. I've now got my stop loss, or haven't changed my stop loss just yet, but I am looking for some higher lows and potentially a breakout through the highs to start really locking in a stop and letting this winner run. I also added XLY to the portfolio with a stop loss below as well. You can see XLY is consumer discretionary stocks, which I thought were a little bit overdone on Friday. And on a Monday, I added in some position here. So I went long with a stop loss below the 618% retracement. This is consumer discretionary. These are companies that are, the consumer buys when they are able to, like, for example, Nike's and Amazon orders and Tesla, right? Companies that are more wants rather than needs. And so, yes, there is some higher risk here, and I thought this would make for a good trade. And so far, I've been correct in that. What I've been a little bit early to was my long on Bitcoin. I went long shares of IBIT, which is a Bitcoin ETF. And what we can see here is Bitcoin mapped out, just the spot price of Bitcoin. I went long a little bit early to the trade, thinking that we could have a quicker recovery than we did. We've hence double backed, but I still like the trade and I'll stay in it unless we break through those prior lows. If that does happen, I'm out of the trade for a loss. And part of the reason I like risk assets is because we still have projections for interest rates to be coming down through the rest of this year and into 2026. That is a tailwind in an economy that doesn't seem to be falling apart. That's a pretty good sign. And I know that can sound like gaslighting when I say the economy is holding up well, and it's not necessarily. Let me be clear. It is a K-shaped economy, meaning the people who have, money and jobs are doing very well, and people who do not have assets are really hurting. I totally understand that. So I'm not saying, the economy is good for everyone, but in terms of the overall domestic output, gross domestic product is looking really strong for the US. Take a look at what we can see here in terms of growth. We have been consistently beating expectations here on the GDP front. For the second quarter, we have 3.8% GDP growth. This is super, super strong. And this is also part of the reason why I like the dollar to the upside. I've actually been bullish on the dollar since around here where I went long UUP. I'll pull up just to show you my updated P&L on this trade. So if I look at UUP, I picked up 5,000 shares here. Pulling back a little bit, I do think the dollar index may, at least try and find support here. We'll see if I'm correct about that, but I do have some long positions on the dollar. And this is also why I actually kind of see, in terms of a risk reward basis, I don't really see the appeal to buying gold at these levels. Now, I am not a hater. I'm super excited to see precious metals making these kinds of moves. I own gold in some of my longer term portfolios, and basically gold and silver. I'm thrilled to see gold and silver making these moves, but I don't, from a trading perspective, have a ton of willingness to chase and buy things at these levels. If we go back to our market scanner and specifically scan for gold here, what you can see is that technicals look incredibly bullish, but you have other things that don't look nearly as attractive. So if I'm looking at, for example, sentiment data, this is also bullish for gold. You have the crowd kind of betting against it here recently. Institutional data, overall net institutions are very long gold, but in recent times they have been slowing their buying buying. So that's what this is telling you, this institutional activity. But it's really the economic data, the growth metrics that have been pretty strong for the US, muting a little bit of the score here for gold. We've had some stickiness in inflation while interest rates are coming down, and that is bullish for gold. I just don't see the same appeal to chasing gold at very high, kind of nosebleed levels here. This thing looks very stretched to the upside. I wouldn't bet against it, so I'm not short, I'm not long, I'm just very much neutral on gold. If I'm looking at this from a daily chart perspective, the first level of support that I see here is not until you get to the 38.2% retracement. That's a move down to 38.75 or so on gold prices. That is a long way away. So I would love to see a pullback in the price of gold before looking at this thing closer. I think it's due, but I don't know when it's going to happen. So again, I wouldn't short it, I wouldn't long it, just going to stay neutral. If you're looking at a lower time frame, which I know a lot of traders who watch my channel maybe trade like the 15-minute, the 1-hour chart, etc. For those who are looking at it closer, I think that you still don't want to fight the momentum here. I don't love the macro story, so that's where it's just not going to be a trade for me. But if I were to draw up a 4-hour support and resistance levels that I'm seeing, 38.2% around 41.10, let's call it, looks interesting. You also have a even more clear level around the 618% retracement around 4,050 an ounce. I would call these areas, constructive pullbacks if you are very, very bullish on gold. You just have to understand that you are buying in what I would call blue sky territory. You're buying at very, very, very elevated prices, and there could be at any moment some significant pullbacks. I just don't know when that's going to happen. And so for me, I know from a technical basis, these look like very clean chart setups, but technicals are only 1/3 of what I look at. I also look at sentiment or the crowd positioning and institutional positioning. And I also look at the macro or fundamental analysis to get an idea of what that suggests about kind of what the economy is suggesting. So when I see growth looking really good for the US economy, for example, it just makes me less attractive to buy gold. Gold is more of a alternative, like rush into gold when you're worried about stuff. And there are things to worry about in the world. But again, I think a lot of that is priced in. I think a lot of the move has already taken place in gold, in my personal opinion. And so if I'm looking at this on the daily chart, the first clear level of support would be the last red daily candle that we got all the way back here. What was this, 4 straight days to the upside? So again, I'm not bearish, I'm not bullish. I just think you have to wait for pullbacks. That's my opinion on the matter. By the way, I should mention, if you want to try out the Edge Finder, which is the tool that I'm using to scan markets for that macro and sentiment data, then check it out down below in the description. If you want some information, or if you want to try it out for yourself, there's all the information you need in the description below. We also currently offer a free version of the Edge Finder. It is a limited version on our website that can be found using the link in the description down below, or simply scan the QR code that you see on your screen right now. For those of you who are watching from a TV or from your desktop or whatever, it might be easier for you, so just scan the QR code if you want to check out the Edge Finder and explore more about what it has to offer for traders looking to implement fundamental analysis into their trading with tools that actually make that approachable. I know the struggle. That's why we built the tool, right? I'm a fundamental macro trader. I know how much work goes into digging up this data, reading articles all day. And I decided, many years ago at this point, I wanted to build something that would automate that process. That is where the Edge Finder came from, the goal of making macro fundamental analysis more approachable in our everyday trading. Knowing how important it is, but also having the tools to scan it is what we are in business for. That is why we build the tools, and that's why we have thousands of traders around the world using our tools to do just that. Taking a look at oil prices remaining low is another tailwind to the overall market. This suggests that with low oil prices, the perk here is that it keeps, prices of everything a little bit lower. What we know is that inflation is largely affected by the price of energy. And in fact, energy is probably the biggest input to the global economy. The price paid to manufacture, move, transport, get to places, all, goods and services are all impacted, though either directly or indirectly, from the price of, our biggest source of fuel, which is, of course, fossil fuels still to this day. Now, my point with saying that is that If this remains low, that's a good thing for the inflation story. If this thing spikes dramatically, that's a bad thing for the inflation story. In fact, part of the reason I would argue that we had a pretty big sell-off in equities and risk assets in 2022 was because of the oil price going parabolic to the upside due to Russia invading Ukraine, causing the supply of oil to come under question. Prices rose dramatically, and that was an inflationary pressure to the market. Knowing these things is important because it tells you the type of environment that you're in. This was a rough period of time for buying stocks. Now, eventually that changed and we saw momentum start moving lower, and that helped with the inflation story, and that became a tailwind. I think we're still in that tailwind. Until something changes, we never know when that's going to happen. We just had a big ceasefire in the Middle East, which was great news, and that potentially continues to keep oil prices muted for the time being. I think oil being a part of your analysis if you're a macro trader is a must, because knowing where it is in relation to everything else is really important. So I think oil longer term, I don't think it will stay at these levels, especially if the economies of the world actually start to do well. I think the demand, and I think that, they have the potential to with lower interest rates, and, the economy of the US still seems to be holding up well, which I think can ricochet into other parts of the world. So I don't think oil prices will remain low forever, but for now, I think the trend is to the downside, and we can't really fight that. In fact, if I look at oil prices here, I'm actually leaning more on the bullish side of oil, but the technicals are prohibiting me from taking any trades. Technicals getting a bearish signal means there's not really a positive sign for me to get long, right? In fact, the technicals would suggest the trend is down for now, but a lot of other things are suggesting bullishness. Inflation data looks good for oil, institutional activity. So this is an interesting example of one where everything kind of lines up for the most part for me to look for oil longs, but the technicals are not quite there. So if I look at oil prices, what I'm looking for here is you can see this downward trend line that I've got, this resistance level here. I think that if we want to be bullish on oil, my opinion on the matter would be, let's actually see breakouts. Let's actually see bulls take control of some of these key areas of past resistance. If that happens, I will probably be bullish on oil and probably be a little bit more cautious on indices, etc. But for now, the trend is to the downside, which I think is good for the inflation story. And I hope this breakdown in oil was helpful. By the way, if you're this far into the video, let me know. Type the word. If you liked that breakdown, if the oil explanation was helpful, type and comment down below the word oil. Just lets me know that that was helpful, it resonated with you, and I keep a very close eye. I read all of my comments, so I will look out for yours, and I'll try and leave a heart for your comment, because I love you. Just kidding, but I do love you. Thank you for watching the videos, but more importantly, I want to know that this content, the way I'm expressing it, is actually helpful, so I appreciate you sharing that with me. And for those of you guys who are interested in getting a copy of the Edge Finder, I also wanted to tell you about today's video sponsor and a free way that you can get the Edge Finder. So basically, if you sign up with ACAP with a new account using the link that you see on your screen right now, a1trading.com/8cap, all you have to do, go to that link. We'll also leave it linked in the description down below, and follow the instructions on this page. Basically, if you can deposit certain amounts, they will purchase the Edge Finder on your behalf. You get access to a ton of our stuff for free. Like, from your side of things, you don't pay a dime, you just create a new account. So if you're looking for a good regulated brokerage and you're willing to switch, of course, this is not available to US clients, unfortunately, due to us not being able to trade CFDs. But for traders outside of the US who are open to switching brokerages, check out ACAP down below in the description using this link, a1trading.com. It has to be this link because for you to qualify for that free copy, they have to have you go through our system. So check it out there. Hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.